Hey, in this video, I'm going to tell you everything that you need to know on the Arm IPO. Maybe you don't even know what the heck Arm is, and don't worry, I'll break that down for you. So we'll start with, what the heck is this company? Do they actually do AI, which is the big buzzword these days, which by the way is perfect timing, especially since the CEO is gonna get a nice $20 million check just for getting this IPO done. That's on top of stock options that are gonna vest, okay? These folks are gonna make a killing on this IPO. This IPO could be rivaling some of the money raised that we've seen from companies like Facebook, Rivian, Alibaba, and let's just say 2 of those 3 lost a lot of money. So walk into this one with a little bit of caution, but I'll also give you my opinion on how I think this play compares to something like NVDA.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
All right, let's just get started with it. This is the filing, widely anticipated filing, the Arm company. Okay, so what the heck is this company? Well, here's their prospectus summary, but let me just simplify this for you, okay? There are these things in computers we need called chips. No, not like Doritos, but things that process computer information. There are companies that are called designers of chips, and designers are going to be companies like NVDA, really popular designer of these chips. And then of course, somebody has to make those chips, and that's gonna be like your Taiwan Semiconductors, which will actually make the chips. And then of course you have companies that supply materials to help make those chips, like ASML. That is a company that supplies some of the advanced lithography machines, ultraviolet lithography, whatever. Basically fancy machines to help make smaller and smaller chips. Okay, got it. So that's ASML, that's a Dutch company. Here's Taiwan Semi, it's a Taiwanese company. They do somewhere around 90% of advanced chips in the world. NVIDIA is sort of a chip designer, and NVIDIA, in addition to designing chips, also provides code for some of their chips, like specifically their GPU chips, which they use a language called CUDA. Okay, now how does that relate to Arm? So Arm is a language provider. Language. Okay, now this is where things could get a little confusing, but we want to keep this simple, okay? There are basically 3 types of languages: x86 and Arm. These guys go head to head all the time, okay? Arm is based on a RISC framework, which this was written as RISK. That's because I think this stock might be risky. I'll explain why, but it's actually RISC, RISC-V. Anyway, so you've got x86. This is your 1970s, 1980s language that Intel founded and AMD uses today. Then you've got Arm, which got really popular because it optimizes what you actually need a chip for, and that is really good for energy efficiency. And so Arm became very popular for mobile, like smartphones. Right now, Arm helps provide code and gets about 50% of their revenues from smartphones and consumer electronics. Keep that stat in mind. That'll be important for the whole AI thing, okay? So anyway, you got x86 and Arm kind of like head to head over here with these different languages for designing and using chips. Now I said there were 3, but just focus on those 2 for a moment. So you've got Arm, and then you've got x86. And these guys are sort of in a battle against each other to get designers to use this code. So yeah, that actually means NVIDIA, in for example, the Nintendo 6 Tetra CPU, central processing unit, has used Arm language to make their chips. Who else uses Arm's language to manufacture their chips? Samsung, Amazon in their AWS, their Graviton AWS chip, their cloud compute chip, is an Arm-based language chip. NVIDIA has used them for many other purposes, but also Apple. The M1 and M2 chips we keep hearing about, those are ARM-based chips. The old A chips that we saw for like the iPhone 12, those are ARM-based. The S chips that were in the iWatches, the Apple Watches, those were ARM-based. Okay, so hopefully this adds a little bit of clarity. So what you have is, you have this language, and everybody in mobility is really using ARM these days because it's more energy efficient. And Intel's kind of like, crap, man, we're stuck with the x86. That battle is so important to understand because today, Intel is seeing their revenues do this. Woo! So why would somebody invest in Intel? Well, listen to this. Intel's gotten so smart, they're now building new fabrication, that is facilities where you make chips, fabs they call them. They're building new fabrication facilities with stimulus money from Joe Biden. And in those facilities, guess what kind of chips they're going to manufacture? Remember, they founded x86. Are they going to manufacture x86 chips only? Hell no. Even they see the writing on the wall. And instead, Intel will manufacture chips that are based on x86, that architecture, and ARM. So what you can see is this competition for which language to use is a big deal. But ARM is the company that came up with and uses, well, it was a partnership back in the day in like the 80s. Apple was actually involved in this, but what's left over is basically the company ARM now, okay? So you got the ARM language and x86. That's just the lines of code that the chip designers are like, okay, cool, let's put silicone together like this, and what if we stack a wafer like this? Oh, it does better. Oh, let's do more of that. Or oh, our enemy over here, AMD, just came out with a bitchin' new chip. Well, let's put it under an electron scanning microscope or whatever these folks use, and go, oh, that's how they manipulated that graphene. Oh man, I'm gonna bring this home to my wife tonight. Okay, all right, you get the idea, okay? This is all like a massively competing industry for chips, okay? Everybody wants the best Dorito on the block. Some people write the language, some people design the chips, some people make the chips, some people supply the machines that make the chips. ARM is simply, and at this point only, that. It is just the language. Okay, now that's really important because there is also now potentially a third language, and that is also it's called RISC-V. But ARM, the R in ARM is because it's based on RISC. But RISC-V, because it's an open source language, RISC-V is sort of this new kid on the block. And people are like, oh, maybe we should use this. But then companies are like, no, we're gonna keep using ARM because that's what we know how to use. Okay, worth knowing though, RISC-V is actually a RISC to ARM. It's probably small, it's probably going to happen over time where you see a transition between different languages, but I think we can say with certainty, a lot of the x86 business is going to ARM or RISC-V. Most of it probably going to ARM right now. Worth keeping that in mind. So, here are just some other examples. I went through some of these Fire TV. I just wrote some notes as I was doing my research on some of the things that are ARM-based chips. Okay, great. In fact, they go as far as saying 70% of the population probably uses ARM-based products. Okay, that does also make me wonder, how are you still gonna grow if you're already doing that much? That is also going to become very important here in just a moment. Here's some things that I wrote down though, because artificial intelligence is going to be a big deal. So what I wrote down is there's something to know. There's a difference between a GPU and a CPU. ARM does a lot of CPU work, okay? This is where ARM does a lot of work. It's not to say that you can't use ARM for GPUs, and I'm oversimplifying in this video, otherwise this will be like a 5-hour long video. Most of ARM's work is going to be in the CPU, those central processing units, especially for mobile devices. So you're gonna hear a lot about energy saving. Keep that in mind because that's gonna be a big deal too when we get to some of the pros and cons of this company, okay? So, CPUs can usually be used for AI inference models, and GPUs are usually used for training. Okay, now I may have lost you there. let me just put it this way, okay? If I said, hey, you're an AI, and you need to tell me if the face that I'm drawing is a happy face or a frowny face, and you started seeing me draw this, what can you infer that the face is about to be? Well, you're probably like, well, I mean, it's starting to curve kind of down, so it's probably gonna be a frowny face, right? You already know that because you've already seen a million different frowny faces as you've grown up throughout your childhood. Hopefully you've also seen an equal amount of happy faces, okay? But the point is, you know what a frowny face is. A frowny face, understanding what this is the first time is really what you're using GPUs for today. It's that training. Whereas once you kind of start drawing and providing, oh, what's it going to be? What's it going to be? Oh, it's going to be frowny. That's where CPUs come in more. Now, don't get me wrong, there are highly intensive visual applications that will require GPUs to tell you that this is a frowny face. Think like Tesla self-driving will probably be more involved in the GPU world. This means there is somewhere a space for CPUs in artificial intelligence, but it's not entirely clear how different that is from just operating regular programs on computers today. In fact, what I can tell you is entirely clear is that if you wanted to build a new language model, you would probably do it by renting server capacity. And this is what the server would look like. The top part of the server would generally be a CPU. Although even NVIDIA is trying to get into that game right now. Everybody's trying to take everybody's bread, okay? This shouldn't be a surprise, okay? Keep in mind, I'm a licensed financial advisor, and even though I can't give you personal financial advice, it's my job to tell you, you need to make sure how to get more bread in your life. That's everyone's goal. That's why we're here. Everybody wants more bread, okay? That's fair. So, the CPU might be at the top. And let's say we're gonna throw in an AMD CPU at the top of the server rack. Guess what the next 10 items in this server rack are? Well, more often than not now, they are NVIDIA H100s. Though there are other weaker models that do good enough for most AI things that people probably need. You probably don't need the latest and greatest, but just to show you the latest and greatest, NVIDIA is probably about a $30,000 chip for each one of these lines right here in a server stack. And that AMD CPU is probably about 15 grand. So if you add this up, you're looking at about 15 grand to 300 grand in income. So in case you're wondering why NVIDIA's gone to the moon, it's probably because of this. Now, they've got earnings coming up. They're always gonna have earnings coming up. This video is not to speculate on NVIDIA earnings. I've got a position in NVIDIA. I wanna be clear about that. Obviously, I don't have a position in ARM because it's not public yet. My position isn't massive in NVIDIA. I think it's gotten a little ahead of itself, though I'll tell you, if they can prove that they're not a flash in the pan, NVIDIA is gonna be a great investment. And I'll explain more about what I mean with the flash in the pan problem in just a moment. But again, the whole point of this is to say, if you're doing language work for this part on AI servers, you're probably missing where the real money is. You see what I mean? And what's the programming language here? It's CUDA, okay? And who owns CUDA? It's NVIDIA. Again, I promise, I'm not trying to shill NVIDIA. I would love to have other stocks. I'm just looking at this like, oh man, people are gonna hype this up like it's an NVIDIA, play, like an alternative to NVIDIA. And personally, I think that could end up being a mistake. Now, I'm open to your commentary in the comments, but we got a lot more to cover, okay? So let's look at some more notes here, all right? Ready for this? So ARM right now says they want to get into data centers. So the CPU strategy of getting into data centers, you have to kind of think, okay, who's the data center world for AI right now? Well, maybe you could do big data like Palantir or Snowflake, or of course your OG names, the Google, the Microsoft, the Amazon, right? That's great. But how different is this new amount of money that ARM wants to raise now from what they've been doing for Amazon's cloud compute? See, remember what an IPO is. An IPO is not an opportunity for you to get rich as an investor. An IPO is an opportunity for the insiders to finally dump their shares on you. This is why usually IPOs are not a great thing to invest in. I generally stay away from IPOs, and even though I've been saying that for years, I still have taken a bite on some IPOs only to get burned and learn my lesson. So, I'm a little jaded when it comes to IPOs. Just gonna throw that out there. Now, it's also worth noting that, hey, AI's been great, but how much has it really boosted our world's productivity these days? My take is potentially somewhere around 10%, maybe 15% if you use some of the strategies that we talk about in my courses on building your wealth, where we integrate, here's how to actually use AI to be productive. But okay, is it really like revolutionary? Is everybody really waking up going, oh my gosh, it's AI? No, of course not. Because the reality is AI has been big data and neural nets. They've existed for 10 plus years. In fact, we've been working on our own artificial intelligence for our real estate startup for 4 or 5 years. We just sort of keep evolving it. And this whole AI craze in March changed nothing. So it's kind of like, yeah, okay, found a sexy way to label AI. It's one of the concerns I have for NVIDIA, okay? It's actually why I'm not kind of going like, oh, let's go all in on NVIDIA, right? Like, there's a little bit of gun shyness that I have. That I actually think there'll be better opportunities to buy NVIDIA in the future, and I'll explain why. Okay, so now we understand a little bit about this ARM versus CPU, GPU thing. Now what we should do is understand a little bit about where this money is going to go, because they want to raise, you know, about $10 billion would be nice. And so why do they want to raise money? Well, they tell you here that developing leading edge chips is getting exponentially more expensive. That's actually going to be a red flag. Keep in mind, this company tells us that 80% of their staff is sitting in research and development. To design a 7 nanometer chip, the company spent about $250 million. To design a 2 nanometer chip, they spent about 3 times that. So this is where they talk about this exponential growth in costs. So why do you want to IPO? Well, because you're probably at the peak AI hype cycle, and it's a perfect time to dump on the normies. Okay, I'm sorry, I don't want to sound like bearish. Maybe this thing will go to the moon. I'm just saying, if I were, one of the executives over at ARM, and I was calling up my buddies over at SoftBank, which is not a bank, it's a Japanese investment firm, be like, hey, everybody's, losing sleep over how great AI is and how revolutionary it is. It's amazing. How about we just IPO now? It's the perfect time to do it. Remember, this is a company, worth noting, this is a company that was acquired for between $31 to $32 billion in 2016 by SoftBank. SoftBank, not a bank, remember that, agreed to sell this company in 2020 to NVIDIA for guess how much? They agreed to sell it for $40 billion. That was in 2020, 2021-ish. But the deal fell apart because the FTC sued and regulators got involved, and it would have just been too big. NVIDIA would have just gotten too big. Now, they're kind of like, okay, well, forget about that $40 billion valuation when everybody was printing money. Now that everybody's so hyped up on AI, why don't we try to sell it at a $60 to $70 billion valuation? Oh yeah, baby, give me those tendies. This way, SoftBank can exit with a sweet, sexy double. Now, you can't blame them. I mean, nobody's gonna blame anybody for making money. But what I did think was interesting going through the filing, and everything I say in this video, you should assume is an opinion, because I can't remember I spent like 2 or 3 hours on this. I could be making a mistake on some of this. So just use some of this as an inspiration for you to go through the information yourself. In other words, ARM and SoftBank, don't sue me, bro. Anyway, SoftBank has basically carved out a little exception for themselves. Here's what's going on. Usually, when a company IPOs, there's something known as a lockup. For example, everyone on the inside, like all these R&D people who have been getting stock-based comp for years or decades, are finally like, yeah, baby, my ship is coming in. We're gonna get rich off the IPO, and we're gonna sell those shares as soon as we can. Maybe. And those folks would be able to do so usually within about 180 days. So in other words, you IPO and then you kind of have to wait 6 months for the market to settle down, and then people on the inside can start selling. Except for SoftBank. SoftBank, at least based on what I saw, only has about a 60-day lockup. That is because they wrote in their lockup expires 60 days after a public offering. Interesting. Okay, so a lot lower. In other words, SoftBank can get out before the insiders. Okay, interesting. What else I noticed is that SoftBank then said, and this is what I thought was really interesting, maybe it's normal. SoftBank's got a bunch of debt. Remember, they're not a bank, they're an investment firm. And basically what they're going to do is they're going to pledge $8.5 billion of their shares as collateral to basically borrow against. All right, that's a whole lot of words. Let me put it this way. The IPO is expected to raise $10 billion. SoftBank owns a ton of shares tied up by this lockup agreement of 60 days or whatever. But they're basically going to take a loan out on day one. And if the stock tanks, the bank that gave the loan can liquidate the shares right away. So in other words, SoftBank gets their money right away on a loan. If the shares tank, then the bank can margin call SoftBank right away to cover the bills, basically. So if it tanked on IPO day, the lockup agreement means nothing. Those shares start getting dumped to the tune of $8.5 billion. Now, I don't actually think the shares will tank on day one, mostly because, quite frankly, it is now the job of the executives at this company to market the snot out of this company. You're gonna see banners from this company about how great this IPO is, how you should invest in this IPO, how you should invest in the next generation of AI chips and Arm 9 and all the latest and greatest crap from them. But the reality is when you go through their documents, there are some more problems. Okay, let's get into some more of the problems here, and then we're actually gonna get into some of the revenue. Okay, let's get to some of the juice. You ready for some of the juice? By the way, if you like this kind of video, subscribe, because there's more where this came from. This is what I try to do all day long, every day. Try to provide value to either the people who invest with me, or to my subscribers, or the people who are so gracious to sign up for the courses linked down below. So, take a look at this, all right? These are some of my initial thoughts that I wrote down. This has to be marketed. In my opinion, if NVIDIA misses on earnings, either Q2, Q3, Q4, it doesn't matter when. Any NVIDIA miss is probably bad for the entire industry. An NVIDIA beat is gonna be good for ARM, not because ARM is necessarily going to capitalize like NVIDIA, but it's just going to reignite the whole AI FOMO, and AI FOMO is gonna be perfect. I guarantee you all of the executives at ARM are like, come on, baby, come on, NVIDIA, beep, 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 beep. Okay? All right. Now, it's worth noting that about 24.5% of revenues come from China from this company. But what's a little scary about this, here's the segment section, by the way, 40% from the US. What's a little scary about the 24.5% that comes from China is that the part that comes from China is basically only determined based on what China tells them. Listen to this. There's a whole section. You can look this up. It's on page 89. Too bad it's not on 69. Anyway, performance of ARM China. Okay? We depend on ARM China for basically a quarter of our revenue. Okay? And this company gets licensing revenue. I didn't even mention that yet. They don't make chips. They just get royalties from the code they wrote. We wrote the best code and everybody uses it. Well, I don't think it's gonna get replaced anytime soon. Maybe there could be a gradual transition to open source, but honestly, a lot of people use ARM. It's good code, it's good technology. I'm not gonna bag on that. Do I really think it's like the next AI wonder? No, of course not. But then again, nothing really is, except for maybe NVIDIA, if they could pull off the amount of server sales that they're talking about. Okay, so what is this right here? So here, they say they're dependent on China, ARM China, right? But listen to this. I'm just gonna read you this, okay? Ready for this? All right, here it is. Under our partnership agreement, ARM China's payments due to us are determined based on the financial information that ARM China provides to us. Accordingly, we are dependent on ARM China providing us with reliable and timely financial information. In other words, if there are any issues in China and China's lying to us, we would have no idea. Okay? Given that a quarter of your revenue is based on we have no idea, it's a little bit of a red flag to me, okay? Furthermore, in light of these issues, we expect to continue to see declining royalty revenues derived from the People's Republic of China, and we could see declining in licensing revenues. In other words, a quarter of their business they think is shrinking. So part of me is like they're almost trying to like jump out of the ship or something like that. I don't know. Anywho, let's keep going here. So this ARM thing is a risk, all right? They talked about 30 billion of ARM-based chips shipped last year. That's not all their revenue, right? Because they just get royalty on that, right? So even if you had 1 million AI chips that shipped, that would be 1/1000th of the 30 billion, $1 million of AI chips, right? That'd be 1/1000th of the company's 30 billion. Now, if you had $1 billion, great, that'd be 1/30th. My point is, NVIDIA expects to ship $7 billion of AI-related data center chips per quarter. That's about 28 billion per year. That actually means there could be a real upside here if they could actually really ship AI chips. But I'm not really seeing that yet. So I want to be clear here because that might be a little confusing. There is real potential upside if they can convert their pipeline to really amazing, top-producing AI chips. But wait a minute. They're not making the chips. That was the whole point of that little setup I just played. I'm sorry I set you up. I built you up just to tear you down. They don't design the chips. They do the code, and somebody else does the chips. They literally say in their investor relations document, we rely on our customers to design, manufacture, and sell, quote unquote, chips. So really, even if you sell $28 billion of AI chips in a year, ARM just gets royalty revenues on that. So a percentage as a thank you for using the code. But if that code is actually using CUDA at NVIDIA or something else, and is this code being used for GPUs? Nominally, it's mostly used for CPUs, and that's really important to remember. Now, do keep in mind, they do talk about potential GPU deployments. In fact, they talk about ARM GPUs. So they exist. It's just not a primary product. See, it says right here, our primary product offerings are leading CPU products. Complementary products are GPUs. All right, good, fine. So, and here's, by the way, where it says that 80% of their employees, global employees, are focused on R&D. Worth noting. And their revenue was relatively flat, but that's okay because the whole chip industry has somewhat slowed down. So I'm not like horribly worried about their revenue. Down 1% gross profit year over year, 8.8% external revenue year over year. That's not a big deal. The whole chip industry has slowed down. Not so worried about that. At about 50 cents in earnings per share, if this company IPOs at the valuation we think it will, around maybe 60 to 70 billion bucks, maybe 60-ish dollars per share. That puts you around 120 times earnings because it's a software company. This is an insane valuation for a company that actually expects to CAGR, compounded annual rate of growth for their compute business, grow at 15%. Okay, that's really, really expensive. I mean, you're talking about over a 3 peg here for those of you keeping track. NVIDIA trading at a lot lower peg. In fact, let's go ahead and pull up the NVIDIA peg, just so you can compare for a moment the NVIDIA valuation. So remember that peg is price to earnings growth. Let me pull this up for you, okay? So this right here is NVIDIA's latest quarterly document. You can see their revenue year over year is actually down 13%. This whole industry has gone through a correction, so it is not surprising to see some negatives here. We talked about the H100 revenue. If that H100 ordering is a flash in the pan, NVIDIA gets screwed. However, if NVIDIA starts growing at 50%, oh, it's gonna be juicy. Why? Because right now, the stock market, Wall Street consensus is that NVIDIA is gonna make over $8 per share this year. Over $8 per share puts them at about a 57 price to earnings ratio, which is about half of the ARM price to earnings ratio. With a 25% growth factor, which is about 80% more than ARM's, they're at about a 2.3 peg. So you have like a 3 peg for ARM, 2.3 peg for NVIDIA. But if NVIDIA is not a flash in the pan with the H100s and they start growing at 30, 40, 50%, this peg could go all the way down to 1, which means NVIDIA stock could double. There's some real potential in NVIDIA, or it's a flash in the pan. We'll find out over the next probably year as the earnings come in. So that's why I wrote at the bottom, the danger is the flash in the pan for NVIDIA. NVIDIA does have about 3 to 4 times the revenue that ARM does, 3 to 4 times the free cash flow that ARM does. But let's be fair to ARM here. ARM does have good free cash flow. I can't take that away from them, and they're well capitalized. They've got about $3.2 billion in current assets versus $2.8 billion in total debts. This is great. It's actually very good. $675 million of free cash flow, no borrowing, no dividends. They don't plan to do any dividends. Just keep in mind, a lot of employees are probably going to end up dumping shares once they are able to do so. Okay, what else do we have here? Whew, boy, I'm telling you, I spent way too long on this, okay? I'm gonna need like an AI beer or something after this. All right, so we got a lot of information here. Oh, okay, I'm sorry. Their cloud CAGR is expected to be 16.6%. I think I said 15%, whatever. But the growth is really unclear for AI, and they talk a lot about energy saving for servers. Their pitch goes something like this. Hey everyone, we did really great with energy saving in chips for things like watches and smartphones, so let us help you save on energy costs for your servers, oh? It's not really like, hey, we have the best AI technology that's gonna make your servers better. It's just gonna make them more energy efficient, is the idea. In fact, they actually say that right here in the Graviton data center chip. They don't talk about how it's better. They talk about better price performance over comparable x86 systems. Now, that's basically incorporating the price of the code, the chip, and the energy consumption. Now, I know that's not super clear, but let me just put it this way. After having gone through this company talks about the energy-saving aspects of the ARM architecture more than they talk about artificial intelligence. So maybe they're trying to go for a high ESG score, which maybe that's realistic. That's the thing. Like, maybe we shouldn't be expecting them to be like, oh, we're an AI play. We should be expecting them to be, no, like, forget about AI for a moment. Maybe AI is a flash in the pan. In which case, who has the best potential technology for mobile chips? Well, hands down, it's ARM. Who has the best potential technology and code technology for CPUs in servers and computers and otherwise? It's ARM. Sorry, Intel. I know Intel chips, the x86, they're good too, but they're just not as good as the RISC-based chips at this point. Maybe that'll change. Intel's not going to try to give up on their x86. And those are some risks, right? x86 from Intel could start being a lot stronger or better or whatever. Or companies like AMD could start switching to an open source version of RISC language writing, which then removes the royalty revenues that ARM gets. Remember, they're just writing the code for these chips. All right, what else? I do not believe that Tesla uses ARM for their self-driving. Tesla, I believe, uses their own code, but they probably do have ARM and some other generic chips, so that's worth watching. Personally, before investing in ARM, I wrote down that I would let this get through the first 6 months of lockups, so that way the executives could dump, SoftBank could dump, you get rid of the margin call risk, which would be a huge downside, you get rid of the employees dumping, and in the meantime, as everyone else buys ARM because they don't actually do their DD, which is fine, maybe they'll make a lot more money than I'm going to on this, and you know what? I hope you do. I am happy for other people to make money. But, I think as people throw money at ARM, there'll actually be a buying opportunity in the other competitors like AMD, NVIDIA, Intel. I don't care. Okay, I really don't care what you buy. Okay, so they do mention they have some limited customer risk. That might be Apple. They don't specifically say, but like 30% of their accounts receivable as of the second quarter, so ending like June 30th, were from one customer. They didn't say which one. And then the next biggest customer was slightly under 10%. They emphasize sustainable growth probably because they're realistic about AI not exploding growth. That's actually probably a good thing. I don't need a flash in the pan investment, okay? I want something that's gonna do well for a long term. So like, I don't wanna sound too bearish because AI is probably a flash in the pan, but they are going to brand this as an AI. NVIDIA is the only one that might not end up being a flash in the pan for AI, right? Maybe you could argue the Microsofts, Googles, Amazons. I'm not convinced. Okay, anyway. SoftBank doesn't necessarily align with your interest. Right, of course. SoftBank's going to dump out of this so they can go on to other investments. This 60-day is actually asterisk because of their margin loan. I found out about that later because it's obviously in a different part of the report, which is annoying. 50% of their revenue comes from smartphones and consumer electronics. We already know that section is going through a downturn. Just look up iPhone 15 sales expectations. There are already warnings for weakness on this side, right? Multiple references to decarbonization. It's ESG promoting is what it is. Big bonuses tied to the IPO price, specifically whatever price they get on this IPO probably increases what the executives are being paid, in addition to the CEO getting 20 mil just cuz. Right, this is technically a British company. Okay, we talk here some more percentages. Fine, whatever. Okay, so what else did I write down? I wrote over here, a little bit of history, how NVIDIA tried to acquire this company. And I think as far as asterisks, that was sort of the bulk of it. Oh, they did asterisk Taiwan as well as a potential risk factor, war with China. Okay. That was an insane amount of talking, and I'm just gonna bottom line this for you. Is this an AI play? I don't think so. Is AI a flash in the pan? Probably, except for NVIDIA, though we will determine if the NVIDIA flash in the pan is a flash in the pan over the next few earnings cycles. I have absolutely no idea. I just know if somebody's gonna make a crap load of money from this AI revolution, it's gonna be NVIDIA. How long that lasts, I have no idea. Because here's the reality. Maybe everybody bought AI chips in Q1 because everybody wanted AI. And then all of a sudden, Google, Amazon, and Microsoft are like, oh no, our AI usage from our customers is actually falling off a cliff. All right, let's cancel some of the NVIDIA orders we had. Well, if people start canceling some of the NVIDIA orders they had, NVIDIA's gonna dump. It's gonna dump so fast. And quite frankly, ask yourself, how often are you using AI on a daily basis? Probably very little. Maybe because you haven't learned productive ways to use it on a daily basis, like I use it on a daily basis, but that's okay. We teach that in the How to Make More Money and Get SH&IT Done Faster course, link down below. But anyway, look, bottom line, Arm IPO. I would not touch it until at least 6 months after. Second, that Chinese revenue is gonna get destroyed, especially with China's economy going to crap, and I just don't trust it. I don't have the transparency into that. And I know SoftBank is gonna dump on you because they wanna get their money out of this. They tried getting their money out with NVIDIA. Now they think they can strike it big on the AI hype, and I think it's kind of like brilliant for them, but it pisses me off because I feel like it's just sort of taking advantage of the hype cycle. But then again, if you were in their shoes, you would do the same damn thing. You can't blame them. So, wouldn't touch it for 6 months. I wanna see growth expectations, wanna see what happens with China, wanna see what happens with NVIDIA. I'm actually not convinced that they're gonna be around forever because open source technology means companies can kind of get rid of them and then not have to pay royalties to them. If NVIDIA can make like a Nintendo Switch Tetra chip without ARM and then they use RISC-V, now they don't pay royalties. Well, come on, man. Even if that's like 10%, that bumps margins, bro. I'm sorry this was so long. If you found it useful, consider subscribing. I'll see you in the next one. Goodbye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.